Ladies and gentlemen, welcome back to Boss Economics World, where we pull no punches and tell it like it is. You know the drill: regulations, politics, bad government decisions, they're all screwing with the economy, and, true to form, we've got another scandalous saga unfolding in the UK. This time, it seems Rachel Reeves, the UK Chancellor of the Exchequer, decided that fast-tracking house construction near major rail hubs is the great panacea for the UK's housing crisis and, obviously, the broader economic mess they've helped manufacture. Let's dig in because, as always, the devil's in the details, and trust me, folks, these are details they won't want us talking about. But we're here to cut through the smoke and mirrors, so strap in for some classic boss economics analysis. First off, Chancellor Reeves, in an effort to pump life into a sagging economy and a woeful housing market, promises to deliver 1.5 million new homes over 5 years, with an ambitious focus on areas near commuter rail stations. Sounds good, right? It's framed as a fast-track planning approval process, a default yes, if you will, for high-potential, high-demand areas. Developers will love it. More houses. More cities. Supposedly, more jobs. Supposedly. Reeves is positioning this as not just a housing fix but a larger boost to economic growth. Oh, and did I mention we're also getting an infrastructure overhaul in the UK? They're planning to streamline approvals on major projects by allegedly cutting red tape. If you're wondering what red tape means, it's basically an excuse for the government to weaken planning regulations, brushing off pesky safeguards like environmental impact assessments, replacing them with what they call leaner outcome reports. Translation: they'll look at this stuff once the damage is done instead of before. How convenient. Let's be clear. The plan to fast-track housing projects isn't exactly coming out of thin air, it's damage control for a crisis that was frankly foreseeable for decades. Supply isn't just catching up to demand, it's been completely outpaced by population growth, people moving to cities, and, let's not ignore this, foreign investors using UK property as a global piggy bank. The result? Soaring home prices, escalating rents, and virtually unaffordable living options for much of the working and middle class. Now, let's talk numbers, because this is Boss Economics World, and the numbers will always tell us the ugly truth. The average UK house now stands at around £287,000 as of late 2024 data. Compare that to a median UK income of roughly £32,000 before taxes, and you begin to understand just why the housing market is collapsing in on itself. Data from the Office for National Statistics, ONS, painted an even grimmer picture: house prices relative to earnings are at some of the highest levels they've ever been. Is fast-tracking housing projects going to fix that imbalance? Well, I'll bet my next year's salary it won't. We're talking about structural issues that I'll get into in a second, but suffice it to say, folks, the last thing developers and the government genuinely care about is affordability. Why are we so skeptical? Because this plan doesn't address the price ceilings on these buildings. There's no guarantee these homes will be affordable, they're simply discussing increasing supply. You can't fix the affordability crisis without ensuring homes are priced for the majority. Now, isn't it charming how every time the government throws out terms like economic hubs or potential zones, they expect all of us to cheer like it's some sort of panacea? Here's a newsflash for those folks: things like high potential are just code for let's inflate property values in already overpriced areas. They're focusing near major commuting rail stations, meaning those homes are almost guaranteed to be tag-teamed by well-off commuters looking to capitalize on their proximity to London or Manchester or any of these other major cities. Who's going to live in these high-potential areas? Let me spell it out: the folks wealthy enough to afford inflated property value, not the workers Reeves claims to want to help. You have young professionals and investors in the queue, snatching up these prized properties faster than you can say gentrification. And that's the thing, isn't it? Housing policy after housing policy, both in the UK or overseas in the US and Canada, tend to fuel wealth inequality. Commuter hubs, after all, are attractive to the middle-upper class segment. For working-class individuals, the mere allure of affordable residences in such hot zones is a joke if the numbers don't support affordability beyond a promotional promise. Here's a juicy bit. The so-called cutting red tape part of this proposal honestly deserves its own satire. Streamlining approvals for major infrastructure projects boils down to weak environmental controls, faster consultations, and less oversight. In essence, the UK is attempting to adopt a rubber stamp approach to infrastructure: more streamlined consultations, fewer delays, fewer restrictions, fewer regulations. In reality, they're also removing safeguards meant to ensure that homes, facilities, and infrastructure are actually sustainable. Environmental impact assessments. Ha! Gone. Oversight. Nixed. Public consultation. Streamlined, which basically means cut short, so people barely get to voice their opinions or concerns about anything in their communities before projects are fast-tracked. And look, here's where it gets strategic. Sure, they're talking about this new, leaner reporting process, but nothing suggests how thorough the process really will be. Businesses are compliant with the outcomes, when it serves financial interest. And let's talk about some of the serious consequences of downgrading environmental assessments. According to the Climate Change Committee's 2023 report, the UK is already way behind on meeting its emission reduction targets for 2030. Streamlining environmental checks means subpar buildings with poor energy efficiency, exactly what you don't want as climate concerns continue proliferating. Here's another nugget of humor. They keep talking about regenerating and revitalizing areas, throwing in words like regeneration, as if revitalizing urban zones will automatically transform an economy. Old Trafford in Manchester, for example, where Reeves plans to champion a regeneration project, sure, it's in the news, but there's absolutely no concrete evidence this will provide impactful jobs for the working class. Instead, what'll probably happen is massive speculation, followed by further property appreciation, great for investors, less so for the people. Let's zoom out. Because it's important to see the forest through the trees here. The UK is not isolated in its housing crises, this is global. For those of you who've been tracking, we've seen similar momentum in Europe, North America, and even parts of Asia. Governments plug the housing gap issues by pushing for supply-side solutions, dangling the carrot of affordability without ever addressing the real issue. Affordability is driven by economic inequality and unchecked speculative investment in the property sector. What really makes this noteworthy is the ideological shift underpinning these moves, neoliberal housing policy. The idea that free market, developer-driven supply moves will eventually trickle down to meet the needs of everyday citizens. We've seen this trotted out for decades, and guess what? It's failed everywhere it's been tried without strict government-led caps on prices. New Zealand, for instance, which once was the poster child for inflated housing markets driven by international investors, saw brief relief only when they banned foreign home ownership back in 2018. Even then, prices only marginally stabilized. Without rent caps, speculation controls, and stricter ownership rights, these 1.5 million houses are just another nail in the coffin of the UK's middle class. Globally, housing and real estate as a share of GDP is soaring. In the UK, it represents nearly 18 to 20%, according to 2024 data from the World Bank. In China, we've seen similar trends, where housing crises have directly contributed to the near collapse of the Evergrande Group, once one of the largest real estate companies in the world, sparking fears of significant financial contagion. Is that where we're heading? You better believe it. House prices spiraling out of control without corresponding wage growth is the first red flag. A government that responds by fast-tracking housing construction without solving price inflation and speculative buying is virtually signing off on a bubble, plain and simple. Rachel Reeves can play the rhetoric game as much as she likes. By fast-tracking housing construction, smoothing over oversight, and packaging it all in a neat press release about growth, she's essentially putting the economy on a shaky foundation of speculative real estate ventures rather than creating a true safety net for the future. Look, at the end of the day, are more homes near railways going to fix the fact that wages aren't keeping up with housing prices? Nope. Will environmental concerns suddenly disappear because they've decommissioned oversight? Nope. Will a buyer's market make homes more affordable if developers have free rein? Absolutely not. The UK's housing economy needs deep reform. A supply boost isn't the silver bullet they're selling it as, especially not in a system as rigged as this one, where homes aren't homes, they're speculative assets. Affordability, speculative control, and regulation, those should be the real talking points. But alas, that might not win you votes, so they peddle short-term growth promises instead. That's it for today's dose of Boss Economics World. Don't forget to like, share, and subscribe if you want more no-nonsense takedowns of short-sighted economic policy. We'll be back next week, and trust me, if they don't want us talking about it, we're going to make sure everyone is. Cheers, folks, and as always, keep those receipts handy.